What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. If you've spent much time on the Lofty Discord lately, you probably have heard about, keeping the cow alive so we can drink the milk. It's a funny imagery, but I think, I get it, but it's become kind of a running joke for a lot of people. Um, what I'm curious about is how many of you are familiar with the turkey problem, right? Is this something you've heard of? So I'm going to talk a little bit about. I made a sale. I got out of my position on Garden Gate today. I'm going to let you know. I'm going to talk a little bit about the turkey problem and how those two things relate, and how my strategy in general relates to this problem. So if you haven't ever read his books, Nassim Nicholas Taleb. He wrote the Incerto set. You really should read them all. I know I talk about Howard Marks all the time and his most important thing book. They really have a lot, their thinking match each other's quite a bit. Taleb's much more difficult to really grasp in his writing style. He writes the way I talk, right? It's rambling, it's connecting back to things. It's not always easy to follow. But he has some really great imagery that makes it easy to remember certain things. And so one of them, he talks about the turkey problem. And so from the turkey's perspective, the farmer's his friend, right? The first 1,000 days of its life, the turkey gets up every day, sees the farmer feeds him, and he's making his life a little bit better, right? And so every single day, the turkey's happy, is happy to see the farmer until the 1,001st day, the Wednesday before Thanksgiving. Um, and you can tell this is there's you can look up a lot of different discussions of the turkey problem. Someone had this great, the turkey's well-being chart, right? And it's every time I see the farmer goes up a little bit every day, and then all of a sudden one day the turkey's slaughtered, right? And from the turkey's perspective, it has no way of knowing that, okay, I'm getting fed every day. It just keeps, but then all of a sudden there's one big surprise and you lose it all. Um, Real estate, the way it is typically invested in, is very much susceptible to this turkey problem. So if you're somebody who buys an asset for full price, and looks to just get monthly payments every month, you are being fed like the turkey, right? And it's often, because it's a levered investment, it is, the more leverage you have in an investment, the more fragile your investment is, and so there's very little upside potential, right? You're not there's it's very unlikely that there's going to be a surprise that you make a bunch more money with real estate. We sort of went through that after COVID, where we had like some really good pops in prices in a certain place in certain parts of the country. Um, Although a lot of those have been given back already, but in general, surprises in real estate are negative, right? It's very rare that, oh, you have a tenant that decided to give you extra money, and so we're very much in this situation where every property that we have, we are, is the farmer and we're the turkey, right? Like it's giving us a little bit every single month. But at some point in time, we could have this huge negative surprise, that wipes us out. So that's the general thought about, what that turkey problem looks like, right? Is that just because you've continually got these little returns, um, and it's worked out and worked out and worked out, and you can look at a long history of it, it doesn't mean that uh you have no way of knowing what happens on that 1,001 day, on day 1,001. um so how does this relate to, Garden Gate, and why did I sell this today? um it has nothing to do with the property specifically, but so this is one that I bought. You can watch my due diligence video I did sometime in January. I'll put a link in the description to that video if you have any interest in seeing, when I bought it, what I was thinking. But it's why, in general, so this one doesn't have leverage. So there's not this huge turkey problem here, right? Because it's when you have unlevered properties, you're, um, less likely to have a really huge blow up where you lose everything, right? Because it's very unlikely. But it's why, that when I bought this one and when I did the video on it, I talked about, this is a combination of yield and a discount. And I think that's really true. I bought this around my average buy was somewhere around $28 per token. All in with fees, it was a little over 30, I think, per token average. And so um, I started selling when it was over 40, and my sales pushed it down to this 38.57. And so I'm gonna just show you a little bit of the math on that and why. So yeah, bought my first tokens back in January. This has been yielding, I've gotten money every single month. It's tempting to hold on to it, right? But if you look at, so, I made purchases on several separate occasions because I did 10 and then 5 and then 5 and then 1. I think I just had some extra rent sitting in my account. I bought it. That was actually one of the most expensive tokens I got, right? Well, no, my first ones were, and it just went down from there, right? And I was getting cheaper and cheaper tokens. But then when the price popped, I sold some earlier this month. I don't think I mentioned it, but then I sold the rest um, yesterday and today. And one of the things, if you're selling stuff on Lofty, it's good to sell a little and then wait a little bit and then sell a little and then wait, because a lot of times somebody else will come back and buy some, and it will move the price back up a little bit because they'll get an alert that says it went down, or they'll be paying attention. They'll see went down, and they'll come buy again. But anyway, so my total buys, and again, this isn't, I didn't make a huge amount of money on this, but it's very good returns from a percent basis. And one of the things that I've realized is on Lofty, I think there's very little opportunity to make money with big chunks of money in individual properties. You have to just be buying 10, 20, 30 tokens at a time. I never really buy more than 25 tokens in a day in a specific property. There's some of them that have a lot of tokens in the pools and you can buy more without moving the price too much. But for the most part, it's sort of smaller opportunities. And so one, that's why I haven't moved any more money on the platform in a while. But the other is that, I think that as they get more and more properties, what the opportunity is going to be is to do the same thing instead of doing it in 30 properties, doing it in significantly more, right? And so, and also, doing it over and over again too, right? So anyway, bought, $1,584 is total purchases in this. And then, total sales 1,893. That number is actually including all of my rent as well. So I collected almost $30 in rent over that period of time from these. Now, I did not, I just stuck that all as if I received it all this last day. It makes my XIRR a little lower than it should be, but it's not enough that I wanted to go out and model it where I'm putting it every single day. And so, it's a $300 profit. Not a ton of money, but for the time, it's a very good return on investment percentage wise. It's also a fairly decent use of my time because it doesn't take very much time to do this, right? And if I'm also able to continue to do this, buy back in, sell again, I've probably spent an hour or two looking at this property. And then some time, whenever the alerts went in, a little bit of time here and there buying, and then a little bit of time to decide to sell, right? So, not actually even terrible when you think about a return on time from it. But again, I think I definitely would have bought more had I been, this was still, and I still am very much experimenting with the platform, but this was really, still very early, because I've only been on this platform since September. Uh, and so, I'm trying to do more and more as time goes on and bigger chunks. But I have found that like you get to a certain point where if you buy too big of a chunk, you're affecting the price too much. Anyway, before I forget, please like and subscribe. In the description to this video, one, I'll put a link to the original video that I did about this property. I'll also have a link to our Discord. So if you want to jump in and discuss any of the platforms where I invest in fractional real estate, you're welcome to do that, and other random stuff related to investing. There's a bunch of people, in there every day talking about all kinds of stuff, but main focus fractional real estate investing. Then I also have links to all the places where I currently invest online. Some of them will give you free money. Lots of them, the deal might not be exactly what my description says because they change them all the time. So depending on when you're watching the video, could be something different. I think I actually have to update the ground floor one because I heard recently that it's you only get a bonus if you buy the end of the flywheel. I haven't confirmed that yet, so I didn't go and change it. Anyway, back to this. So, $300 profit on a little bit less than $1,600 invested. That's a 20% or 19.5% profit. But because of the very short time frame of this, I mean, if you look at it's just over a month from my last purchase and my first sale, and less than 6 months in the whole spread. The annualized return ends up being over 100%. And we've talked about this quite a bit on here that at first I really thought it was silly to annualize these, but I've already reinvested more than half of what I got out of this property today into other deals where I think that I'll be able to, achieve similar returns. And so I actually think I don't think I will average this over 100%, but I think that somewhere in between these two numbers is going to be my real return, for the foreseeable future on this platform, which is, really impressive. But okay, so how does this relate back to the turkey problem, right? So, I just made fantastic annualized return. I did it by buying this property at a deep discount and then selling as soon as it got closer to what I think the real world value is. Um, and I'm doing that over and over again on this platform instead of it's really tempting, especially on a property like this, that's just continued to perform, to just keep it, right, to hold on to it and to just keep, collecting the rental yield and then someday in the distant future sell it, right, for a profit. But at this point in time, and the sort of the concept of that I think is sort of the trap that the turkey problem presents itself, right? I mean, so at the moment, I've really already made the bulk of the profit that I'm going to make by holding this asset, right? I bought it at below 30, selling it. Some of them these are the net sales after fees, but so and that one was way low. I guess this one was lower. These two most recent ones was actually when it was over 40. This one must have been like 38 or something, and then after fees it's a little bit lower. But anyway, um, I think going from 28 to 38 or 28 to 40 is most of the profit that I expect to get out of this property. And so that was a really nice surprise. And so in general, you don't have those upside surprises, but when you buy at a really steep discount, you have the potential for that, right? Which is why I am focusing on these discounted tokens. But from here at 40, if I had to stop and think, okay, is it more likely to move from 40 to 50 or from 40 to 30, right? Like, where is my upside or my downside more likely right now? And, it at $38 a token, it's only a 6% rental yield, right? So for me to hold this moving forward versus taking that cash, it's a it's a low yield relative to everything else that we're investing in. And the risk is really to the downside that it's just going to go down, right, versus up more. And so so I think to hold it from today's, if I looked at buying it today, holding it at a 6% yield and moving forward, that's the turkey situation, right? Oh, I'm collecting my little bit of yield, but at some point in time, the most likely outcome of a surprise is that I lose a bunch, not make a bunch, right? And so that's why on this one, I've just decided, okay, made a great profit, right? Almost 20% already, short period of time. Let's take that money, let's move it somewhere else where again we can be in a situation where it's asymmetric to the upside, right? It's much more likely that I'm going to make more money if I get, that it's going to move up in price than it is that it's going to move down, and then have the opportunity to do it again, right? So that's, I just wanted to talk about, sort of provide a different perspective on why this, buying the discounted tokens, and even on like, and why I would sell something that is, you know, continuing to operate, right? There was nothing bad that happened at this property. It's only been good. It's just continued to pay. Now, this is the one that there was, some purchases of Bitcoin in the entity, and that scared some people away. I actually think that's why I got a discount on it. I think some people were like, I don't even want to be a part of this, but having our reserve as Bitcoin. But honestly, I think that's sort of trivial when you think about like the value of the property itself. Um, so let's see. Uh, that but so there's nothing that's happened here that's increased the risk. But when I'm looking at the yield, like it's easy for me to look at this and say, okay, from where I bought it, I was getting 8.5% yield, somewhere around there, I think. But now because the price is higher, my yield, like if I'm looking at my return on equity, it's lower, right? Because if I take that money out today and I invest it somewhere else where it has a higher yield, then I can actually then I have to look at the return on equity, not the return on my initial investment. And so that's what I think some of the people do why they get trapped in this because they say, well, I bought it for 20, I'm actually getting a 12% yield. Well, you're not because you could take this cash out today, less fees. And so you have to do the math on it, right? That's why I don't just sell when this is, I made 20%, but it really was up over 30%, right? In order to make that happen, because after all fees, um, it has to move up, significantly more than the amount that your return ends up being. But anyway, if you're looking at just, what it tells you your rental yield is relative, like on your account screen, it tells you a much higher number if you bought it cheaper than what it really is today. But in actuality, the number that matters to me today is what is that right now, right? Because I could cash out, take that cash and put it elsewhere. And so I'm getting a low return on my equity, even though I'm getting a good return on my initial investment. And so by cashing out, taking my profit, I can then go and reinvest that somewhere else where I have, again, that higher upside than there is the downside. Um, so I don't know. I think if and so this is probably not even the best property to give you an example of the turkey problem because it is when I bought, because and I don't really have very many because I'm not buying the ones that I think really fit that. I mean, if you wanted to think the perfect model of that, it would be where you're buying a full price token because it's consistent, giving you consistent yield and it has for a while, right? If you find one on the platform that's paid out for a while, you're paying a high price on it, um, maybe even a premium over the $50. That's where you're getting those regular payments, but as soon as there's a surprise, it's going to be a big negative surprise, right? There's no upside surprises happening. So this one, and with most of mine that I'm buying, I am buying with at the deep discounts, and so I've already factored that into the majority of the investing that I'm doing. So I didn't have a good one to just say, hey, this one is one that I bought that blew up, right? But I think I'm sure somebody, if you have one, put it in the comments, right? One that you paid full price for that looked like it was going to be providing good returns, and that ended up being, where the farmer wasn't your friend on that 1,001th day, and one, 1,001st day. Yeah, okay, way too late if I'm saying in one. But you understand what I'm saying, right? Ones that you have those promises of steady returns every single day, and it looked good at first, and you paid full price, and then it turned out that you just ended up losing when you did have that big negative at some point. Some point. I think basically anybody who bought into properties um, in the first year of Lofty. I mean, unfortunately, I think almost all of those turned out that you were a turkey, right? Like, I mean, with a couple of exceptions. I know there's a few that have paid out the whole time, but very few, right? And I think probably if you look at like what your actual return on those are compared to a lot of alternatives you had in the marketplace, they weren't even great returns anyway. Anyway, that's all. I wanted to just introduce this idea. Really, I was just kind of laughing about the milk and the cow comments people were making, and it reminded me of the turkey problem. And this is, I think I've read this guy's books several times. And I think that you've heard me say that about the most important thing book as well. And that's sort of like I like these ideas to be really deep in my brain, right? And it's why you hear me repeat a lot of this stuff a lot because I think a lot of people make mistakes when they're investing because they might know something, but it's not so deep that their emotions overcome making the right decision. And it often happens because those ideas aren't like really just part of your subconscious thinking about things, right? But like if I'm always trying to, like, one of his other things he talks about all the time is collecting free lottery tickets and not being a sucker. He's got all these little ideas, and I think they're just like really deep in the way I think about things now. And so it has just naturally come out in the strategy that I've developed on Lofty, which is, but I think that it is, I guess, in general, like if you wanted to think about a lot of people talking about ground floor, how they were doing well until they started having defaults, and that's, debt is almost always, you almost always have a perfect turkey problem there, right? Like if you own a mortgage, you get regular payments, and then the only surprise could be that they stop. Now, in certain instances, that's not true, right? Because you could end up foreclosing and then doing better by owning that property. But that's only if you're in a situation where you actually can take that property back and do something with it. If you just let it go to foreclosure sale, you're often losing money, right? Which is what tends to be the case with a lot of those notes, I believe. So, that's a scenario where I think you run into a turkey problem. I think really even the mogul stuff, right? Like, I mean, they're providing solid returns, but there's not going to be. I mean, I think there might be some surprises to the upside there though, because it seems like they sandbag their projections in some instances, right? Like sometimes their projections aren't even as good as last year's, and the expectation is they're probably going to outperform. So I think there could be some upside surprises, but it's not like when you're getting something at a huge discount where on here where all of a sudden, so this is one that I thought I'm going to just hold, so this is basically a reverse turkey, right? Like I thought I'm just going to hold it, collect payments for a very long time, and then someday in the future when it appreciates and is sold in real life, then I'll get a good payout. Well, it turned out instead of having to do that, the price popped in a very short period of time. I was able to sell and end up with a return significantly higher than anything that I had expected, right? And I think that you can see that happen in the ones where you buy it for the cheap token and then push to a real world sale. Like again, it's the opposite, right? You're not getting a little bit all the time and then hoping something, hoping you sell it in the future. You're getting a lot of those, they're not performing. You're getting nothing, or maybe the property is even experiencing some negative cash flow until you had that nice surprise and it sold and you made a bunch of money. And so that's the reverse turkey. So anyway, I just wanted to introduce this idea. I think that a lot of sort of nerdier investor guys or finance guys will reference the turkey problem sometimes. I think I've never mentioned it on the channel, but it's one that's always rattling around in my head. And really, is more than anything, I'm always thinking about reverse turkeys. Uh, which sounds weird, right? But it is and so if I'm going to start to use that, I want to make sure I've at least like really outlined like what that problem is, how it relates to what we're doing on Lofty or on any of the fractional real estate investing sites. And then, really, I will also just wanted to talk a little bit about one more just fantastic deal, right? And so, I've got a bunch of these small ones now, and I think that at least in the short run, this is what a lot of my stuff on Lofty is going to look like, right? It's either I bought the token cheap, sold it when the token popped, or bought the token cheap. We sold the property in real life and made a great return. Um, I think some of them will turn into bought the token cheap. The yield came back, right? Like Sangamon is a little bit like that. We got a decent yield on that now. Eileen as well. I think we have a decent yield on it. So there's some of those examples, but in general, that's all of those look the opposite of what we're describing here, right? Instead of going up, 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 and then drops off a cliff, I buy it, and then okay, maybe it's poor performance, negative cash flow, and then at some point, bam, that's when we hit our return, right? So that's why those are reverse turkeys. Uh, But yeah, I think that there's just tremendous opportunity on here to find those. And even though they are at the moment, mostly small, I'm working on Odom, trying to get that one to, we've had a proposal out and trying to figure out what we're doing with that. I think that's going to end up being, I think we're not going to have as big of an upside surprise as I had hoped with that. But we'll see. We have a couple of options now, so we'll see where that goes. That's one where I think, I mentioned that, you can't buy too many tokens because you end up pushing the price up too much. And that's one where I think I messed up a little bit because it's the one that I've invested the most in. I have like 390 tokens of Odom. And it's, my average, let's see, let's actually open that account page here. Can I get to it without breaking my screen recorder? Let's see. Yeah, and my average cost basis on that one is $29.79. If I had not been such a, I bought most of my tokens since the pool opened up. If I hadn't been buying so much, like if I had bought half as much, probably I could have done it with a significantly lower cost basis because what was happening is I was the one driving this price up. And I think I'll do okay at this cost basis, no matter what we do. Like even we've looked at just selling it to an iBuyer, and I'll make a little bit of money if we do that. It won't be some huge return. We're looking at selling it with owner financing, but in general, like this is an example of one where I went too far buying too many tokens, and so drove that price up more. And so the deals are really in the discount here, right? Like your profit is made by the deep, by the depth of how discounted it is. This is another example here. This one's actually sold in real life, and we're just waiting for the redemption. Had really good, this one I was a little bit more disciplined in, didn't buy nearly as many tokens. Um, I think our payout's going to be around $40. They still haven't told us exactly what it is, but you could see, my average buy on that one was less than $24, and then plus fees. Almost all of these, or I think all of these were actually limit buys though, so not a ton of fees. So that'll be a really, really nice percent return. As soon as we actually get paid out on that, I'll definitely be sending you a similar. Probably just do a short on it because there's not that much going on. But in general, that's all those I just wanted to highlight those is because of just showing like, I think we're going to be limited as much as I love these deals. I think you're limited to buying pretty small, I think maybe 50, 60, 80, 100 tokens over a certain period of time. But like when I try to get 300 plus tokens in something, I move the price up too much to where that deal, I kind of killed the deal a little bit for myself. If I had bought less and let the price sink more and got more in the mid to low $20, then no matter what we did with it, it was going to make sense, right? And so I don't know. That's just on top of mind because I was just talking to somebody about that deal before I jumped on here. I still think it could turn out okay for me, but it's not going to be this 100% XIRR. It's probably not even going to be a 20%. Well, it will be over the long haul. It'll be more than a 20% ROI, but annualized, it'll just be an okay deal, I think. So anyway, I think now I've really gone off on some other tangent, so sorry about that. But really, all I want, this is it. This is all I want to say. So while you're out there, let's look for some reverse turkeys. But if you do have an example of turkeys that you've bought, I'd love to hear about them, right? Like ones that just looked great, you were getting paid regularly, and then something happened. Maybe it's a big CapEx item. Maybe someone stole your deed. Who knows what it was? Uh, it's a terrible one, right? I mean, that could happen, I guess. Well, it shouldn't happen on him. But anyway, that's it for today. Until next time, I'm sorry to laugh about it. It's just, it's a, I know there's people that are losing, probably, potentially losing a lot of money because of the issues going on. Um, it's just the ridiculousness of the situation more than anything that makes me laugh. But yeah, apologize for that. Until next time, I'm going to keep making mistakes so that you don't have to.